Well, that's why I want to follow these two. All the cruise ships have to raise capital, like AT, like Carnival. I mean, there are many cross currents here. But the one thing I'd point out, David, is that a lot of companies that have fantastic businesses like Danaher, which I own for my travel trust, just killing it. You have a fabulous business with great growth, of which there are many. It's been a terrific time.
It has. Another person who was on Squawk Box this morning, yes, we used their interviews because they have some good ones, was John Gray, the president of Blackstone.
I thought he told a great story,
he
but the market
does.
disagrees with me.
My friend John, who breaks my heart every time by going on that show and never ours, stock is down about 5%, but Blackstone also has a pretty broad-ranging view of the economy, given all the portfolio companies that they're seeing the P&Ls on. This is what he had to say when asked about sort of what are they seeing when it comes to this idea of a slowdown.
We're seeing some slowdowns on the ground in shipping volumes in our ports. We're seeing it in online advertising. We're seeing it in furniture. We're seeing a range of areas where there's a deceleration.
Yeah, he mentioned advertising, and obviously that oftentimes is a decision that companies will make because it's easy to say, you know what, let's hold off for the third quarter or the fourth quarter now.
But his housing story was still pretty positive.
Yes.
And his broad portfolio of things working out quite well. I felt that we could easily seize the negative there, but the positives, I think, overrode.
You did.
Yes, I really did.
I've mentioned their B-REIT product a great deal. The Blackstone REIT becoming one of the largest out there, taking in what had been as much as $3 billion a month. Now, it's flat. They're not getting it. In fact, what a report out yesterday said, incoming versus outgoing is basically they're not taking in any money. That's an interesting data point.
Very.
John was not asked about it there. But I am referring to a research report that was out yesterday that estimated, based on this analyst's estimates, that it's, redemptions are equaling inflows at the B-REIT, Jim. What did you take away last night from BlackRock and Larry Fink in terms of
level of
economy or anything else?
A level of optimism.
Really?
That supply chain problems are already easing. That inflation, while not transitory, obviously, is going to be defeated by the Fed. You got to give it some time. That the areas of the economy that have overheated will have individual issues, and he's most concerned about famine, food shortage, food security. Now, this is a very practical man, and that should be. We know that that's been the single biggest source of revolution in the history of our world.
Yes.
And he's quite concerned about that. He actually brought up the notion of fertilizer being too expensive. There is a fertilizer cycle. The stocks sell 4 times
also,
earnings.
there hasn't there been some issues because of Ukraine, because of certain things that come out of there that are used in the making of
very much so, and there's also a natural gas component. But he's an optimist.
Yeah.
And he also we really went over a lot about climate change and how I think people are not understanding when he says he's focused on climate change. Obviously, he's a believer in climate change.
Very few people now.
Right, but he's focused on the idea about the business risk of it.
Yeah.
And that people have to recognize that it just happens to be one of those important risks in the same way that we should be thinking about the consumer being weaker. I mean, it's that elevated for him.
Let's take a listen to Larry Fink from last night's Mad Money, I think, speaking more broadly about the economy.
But the reality is we've seen this. The inflation is going to be fixed over time. We're already seeing commodity prices crashing from the high.
Right. No one talks about that. And supply chains gotten better.
Supply chains in a lot of the industries getting better right now. And the Federal Reserve is tightening, and that is going to, the Federal Reserve's tool is to tighten, and through tightening they limit demand. So is there a risk of a recession? Sure.
But we're not in one yet.
No, but even if we're in one, it's going to be quite mild.
But that's huge.
No, and that's somewhat optimistic. I'm picking that up as well to a certain extent from people who have broad sort of visibility into a lot of businesses. I talked to one, let's call him an Uber banker this morning, saying, I see a slowdown, but not a recession.
Right.
The low-end consumers hurt, but companies' ability to cut operating expenses quickly, to adjust quickly, and also some signs of improvement already. Companies are moving very fast.
Well, I mean, I think that we have to get rid of this narrative that when an alphabet decides to slow hiring, that somehow that's bad. I mean, that's prudent.
Right.
A lot of companies doing Microsoft being prudent. They're just saying, listen, we read the papers. It could happen. But we're seeing a men from boys, you know, it's a wheat chaff. I guess we should never use that, you know. But you look at Cliffs, Cleveland Cliffs versus Nucor. Now, Nucor reported today, and Nucor does pre-announce, but Nucor, NUE, when you think about it, a lot of their grades of plain vanilla steel are not doing well, but they're proprietary steel. So look at how well that's doing.
Yeah.
That tends to put, you don't have a serious recession and have Nucor stock up $6.
Interesting.
Shepard Smith here. Thanks for watching CNBC on YouTube.